is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, yes, the last 24 hours has been a little bit indecisive, as you will see. Ahead of the release of the US consumer inflation figures, we are witnessing some repositioning trades, which is obviously exerting pressure on gold prices, leading to that situation where price action triggered our stop loss order to record our first loss for this week. So yesterday we had this range bound identified where we saw price action confined within the $2,189.50 level and the $2,175 area to emphasize the prevailing uncertainty in the market at that point. Yesterday the support line was at 2177. I can still remember it was around here. I had to extend it when the consolidation expanded. So right now we readjusted it to the 2175. So you can do the same on your own charts too as well. And during our live session, when we notice how it has become difficult for sellers to continue, as we kept on seeing sharp rejection of this zone, we decided to consider buying, especially after taking into consideration the bullish momentum in this market. So we decided to have a buy stop order above the 2182, which obviously got triggered but did not do very well as it went to eat our stop losses this morning. But it's okay. It's still the second day of the week, and we still have enough room to recover the losses we incurred so far, and of course make some significant profit on top of it. And thank goodness we have series of high impactful event coming up later this week, which will be bringing some fresh impetus into this market. Now, as it is, gold is currently displaying signs of decline while maintaining this consolidative trend, and this could be attributed to a temporary halt in the US dollar's downward movement coupled with stable US Treasury bond yields. And we know how correlated the US Treasury bond yield is with the US dollar. Considering these factors, it is advisable to keep our bearish bias open. The possibility is still very high, considering the fact that we are at an all-time high zone where the tendency of a crash is likely going to happen due to the fear of market crashing. That's an obvious thing. And the other thing is profit-taking activities for those who had capitalized on that strong bullish momentum. So as it is right now, market participants seems to be reducing their bullish positions in anticipation of the US consumer inflation data. And of course, these figures will influence the Federal Reserve's policy decision and could provide a new direction for gold prices. And please note that a higher than expected CPI report today might reduce the chances of an immediate rate cut by the Federal Reserve, potentially strengthening the US dollar and creating challenges for safe haven assets such as the gold. Now, with the understanding behind the scenes of what is going on and driving the market sentiment, let's look at things from a technical standpoint, especially starting from the higher time frame. Now, scaling back up into the daily time frame, remember this is what we saw at the beginning of the week after taking into consideration the character of price action since the month of August of last year. And what we were able to come up with here is an ascending channel which buttresses the strength of the bias. Now you see when we connected the series of higher highs, we have the resistant line of this ascending channel. And when we connected the series of higher lows, we have the support line of the ascending channel, while we also have an marginal line, trend line within the resistance and support line of this ascending channel. So it's more or less a bullish trend at this point. And we also acknowledge a couple of more levels here The first one here is the $2,080 area. Remember, this was our key level for last week, which guided that bullish opportunity we took advantage of as we saw price broke out of the structure right here last week trading session. Now we added another level here, which was serving as our key level for this week, and that is the $2,143.50 level. And the reason why we use this level is simply because of how this area was serving as a selling niche sometime in December, and we saw price break out of that structure last week. Now the question at the beginning of the week is, are we going to see price come back to retest the structure in an attempt to continue the uptrend? Or is price going to come back into the $2,080 level to retest the structure in an attempt to continue the uptrend? And if we look at the distance between where price action is right now and the first level, that's about 350 pips, which is something we want to capitalize on if it so happens. And we are looking at a maximum of about 960 pips if price goes that far, and over 1,000 pips if price will come into the support line of that ascending channel. So these are one of the scenarios we were looking out for at the beginning of the week. And we were also trying to see how the market participant will react to this all-time high to decide if this bearish move is what we are going to be seeing today, this week, or we will likely see an uptrend continuation. Now, to have a better idea into what is going on around this all-time high zone, we will scale down into the 1 hour time frame, and there was where we identified that range bound trading activity, as you will see here. Now, if we take a closer look at the structure after considering the last couple of weeks, remember that we identified this ascending trend line, which appeared to have been broken in the last 24 hours. And for price continue to trade below this ascending trend line is a sign that we may likely see a bearish move. So what this simply means is that the whole range bound structure here has a potential of transitioning into both an uptrend continuation pattern or a reversal pattern. So selling below the 2,175 area will make a lot of sense at this point to capitalize on that bearish move, and we are looking at that key level or the 2,140 that we identified on the daily time frame. Let me show you one more time. So we are looking at TP target at 214,350 or the 2,080 area, which dovetailed to between 350 to over 1,000 pips if price continues that trend to the downside. So let me go back to the 1 hour time frame. So here we are. So I encourage us all to mark out this range bound structure, as we will be needing it to guide our trading decisions. So we are looking out for selling opportunities below that support line. However, if price action continues to find buy pressure around this area, I wouldn't consider buying unless price action takes out the highest point here at the $2,189.50 level. And I'm beginning to consider some I'm not sure how that is going to play out here. We have a trend line, we have something around this area. So if we bring back our candle chart, and if it so happens that price breaks out of the 2,182, I would not be having a buy stop order in this case, because I don't want to repeat this this situation we had yesterday. So what I will do instead is wait for the breakout happen. Once we see the breakout, go into the lower time frame. Once we see a retest of structure coupled with buy pressure from that area, then we can now join that uptrend move to the downside, leading to the trigger of our buy stop order at the breakout of the $2,189.50 level. So this is how we are going to be managing our positions for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference points to guide our independent trading decisions. And to make things easy for the high to capture the next move, also emphasize that between the 2,182 and the $2,175 level is that area we will be focusing on today. So depending on the direction of the breakout will determine where we shall be going. A breakout of the 2,182. Remember what I said? I said I want to see a retest of structure before jumping into that position. But if you can afford to risk a minimum percentage of your account, you can place a buy stop order above that structure. And if price breaks down the 2,175, we are looking out for selling opportunities. So this is my simple view here. It's a simple trading setup. Let's see how the market will play out with the structure, and we shall be on standby to capitalize on the next move. So I hope I made myself clear on this one. If you have any questions whatsoever, feel free to let me know